Well, I would say the profile has expanded in the sense that we have lowered the rates in this industry, far too low, by the way. It has opened the door to a wider group audience. And in that, so if you consider a luxury guest, one that comes to luxury properties, yes, we definitely have changed the mix. And it is a different group in the sense that it's people that in the past were not able to afford or not willing to afford to come spend $300, $400, $500 a night for a luxury hotel. As those rates plummeted over the last couple of years to dropping by as much as 30 to 50%, it opened the door to a wider group of people to experiment and enjoy luxury properties. The interesting part of it is that it's definitely, it adds a different mix and different demographic and a different, might say, social level in some cases to a property's mix of guests. The expectations can be different, sometimes more difficult to satisfy that guest, and sometimes much easier. It just depends on the individual. But it definitely has a lot of dramatic changes, you might say, in dealing with the guest and planning for the guest in this new marketplace.
Yes, we're seeing a much younger luxury guest. Our properties in California are, close to Silicon Valley, and we get a lot of guests from the Silicon Valley in the high-tech sectors. I think that we started out much more of a baby boomer clientele, and now it really spans multiple generations.
A recent Economist had a very interesting article. They said that there are as many millionaires in the world today as there are Australians. But the interesting profile of those millionaires, 16% of them inherited their wealth, 46% of them were entrepreneurs. The new luxury customer is looking for memories, experiences, relationships, connections, very different than the old typical luxury customer that just dressed up and only went to luxury hotels. So our challenge is, how do we blend the really finery of, call it old luxury, with the experience of new luxury? And that's, what we're working on very hard across the industry, but in particular at Conrad and Waldorf Hotels and Resorts.
Well, we think there's a new sensibility about luxury, less about excess, less about extravagance. There's a more practical side of it. We still believe that some of the fundamentals are in place that to speak to the more affluent customer needs to be a relevant message. Also the fact that they want to be recognized. So that's really a core focus for us in our portfolio, is to be sure that we know our customer when they're coming in and try to anticipate their needs as best we can.
I see the luxury guests a little discerning with respect to the services that are provided. They're more tuned into exactly what they want to get from a luxury property. So I think in the days of old where you had a plethora of services and amenities out there for them to choose, they're more focused on the personalized service, the high touch, the high feel. And they expect the staff in every aspect of their dealings with themselves to really care about them, to really make that emotional connection. And I see that more and more as the business starts to pick up, and the focus for whether it's spa treatments, whether it's private ski school, whether it's scuba trips and so forth, is they feel that they want to be pampered, but they want to do it at their own time.
Well, the new luxury guest could very possibly be a combination of today's luxury guest, plus the fact that the Gen Xs and the millennials are more and more affluent and have a desire to travel on a luxury standpoint, if you will. What's the biggest piece of the world today is the baby boomers. They have discretionary income. They're healthier than they've ever been before. They have a desire to keep on going, even at what might have been a later stage in their lives. So They're the biggest pocket, they're available, they have money, and they're very much interested in experience. And hotels just like the one we're in today, where there's a great story to be told and many things to do. And I think the other profile, as you look at the Gen Xers and the millennials, is that families are very important. And they travel with their families because they're so busy in their lives that the time they take away, they still want their kids to experience what they're doing as well. So the Gen Xers and Gen Ys and millennials are all a part of what we're doing right now, and they're coming up. Their discretionary income is growing. But really, it's the baby boomer group that's very healthy and going to be for a long time and really has the discretionary income to spend.
You know, I think there's always going to be a luxury customer. There's going to be a person that is really interested in the nuances and the extra touches that come along with the luxury experience. I think what's happened over the last 2+ years is that the price point for the luxury customer really has been recast, reset. And I think it really has required all of us in the industry, in the luxury segment, to go back and rethink what the values are that are associated with the luxury experience. But for sure, there is a luxury customer that's out there, and that person obviously has a bit of a different angle on how they view value. And I think as operators, it's forced us to go back and rethink really what the value proposition is and the price point that's associated with it.
I think one of the things that we're seeing in our hotels and pretty consistently is that the guest is really looking more for an experience than to be pampered. And I think it's incumbent upon us, and one of the things that we're focusing on is really creating that experience versus really trying to over-pamper the guest.
Yes and no. In our situation, what we do is, and I'm sure most sophisticated hotel groups do, is you really work on revenue management. In our case, our bookings for group this year is down about 12% from what it was last year. But what we have done is that we've replaced that with higher rate business in the transient. So our overall RevPAR increase is about 18% this year versus last year. And so we turn down so many groups now that want to come to our properties, but they want to come at rates that they got maybe a year ago or 2 years ago, and we say we can't do that and offer you the service that you expect. And so we're turning down groups now. Therefore, our group mix is down, but transient is up by over 25% this year over last year, which they're paying a higher rate. We're very happy with that. So we basically have rate controlled the group down. So what we're hoping for, obviously, is that the group business will come back strong, but at the rates that we need to, so we can give the service quality we would like to give.
For the most part. And when I say for the most part, what I mean is that there's still, given how down the overall economy is, there's still some degree of people not wanting to appear overly opulent, if you will. But that's really more self-generated than there being any kind of stigma. I think the political aspects of it have pretty much gone away.
Yes, we do. There are smaller groups. They're in different market sectors. Our Cavallo Point property, which is at the Lodge of the Golden Gate in the Golden Gate National Recreation Area across from San Francisco, is a very attractive venue for smaller, high-level think tank groups. We have the advantage of being in tremendous proximity to San Francisco, yet in a natural setting with hiking and exploration opportunities. And I think that what's happening in the group sector is people are looking for different types of venues, more unusual venues, still with a very, very high hotel standard, but also an experiential possibility.
Like everything, like after 9/11 and now the economic downturn, it's coming back, but it's coming back different. 2 years ago, everybody saw the large congresses, group meetings that book about 2 years in advance decline. What we're seeing now is smaller groups in smaller duration, more frequent, and booking closer in. So although we're seeing the recovery, particularly in 2011, when we look at 2012, it's kind of a wild ride because you don't know exactly what's going to come in the back half of 2012, for example. So we kind of have to change our sales strategies, but we're embracing it, and we're feeling great because the meetings are back, they're coming back, and that's the kind of base that we can yield off of.
Our indications are very positive. Our group backlog for this year is up. We're slowly seeing the rate start to rise, which I think is really everyone's focus at the moment, is trying to build rate. It's a good indicator that we're also seeing the incentive business start to come back, which is an important element of our business for the affluent traveler. That side of the business had taken a bit of a hit over the last couple of years, so that's a very good indication. I think we'll start seeing some rate growth there as well.
We actually have seen some positive trends in our mountain resorts as well as our beach resorts that they're not coming back in droves the way that they were many years ago, but we're very optimistic because we're seeing some positive trends, not only for the first quarter of this year, but also for some summer business that's picking up and for our future years. So the group customer does need to meet face-to-face, and we're seeing that we're a perfect venue for them to be able to do that.
I do see group business rebounding. I think what's important in the luxury class to be careful with is to make sure that you're quantifying it as a opportunity for prudent business meetings. And if you look at the way the economy has been for the last couple of years, it's still important to be very careful on how corporations look to the external world. So when they use some of these luxury destinations, they really have to, in their mind, reconcile what their business purpose is and utilizing one of these hotels. So it's incumbent upon these destinations and hotels to help businesses show it as a very productive, prudent business decision to be meeting to grow the value of the company. But I do see it coming back, and it's already, and we see some very good momentum for it going forward.
The group business has already shown some signs of a rebound, which is really encouraging, I think, for the industry. And, it's coming back slowly as corporate America loosens up its purse strings. I think all of those are really, really good signals. But it's going to take some time, I think, to come back to the robustness that really occurred in our industry prior to 2008, 2009.
I think the IAG effect is going to continue for some time. I think that the business traveler in the leisure segment has really been the biggest impact to that. The leisure travel has continued to travel, and they will continue to travel. But I think we'll continue to see some erosion of business in the group side, for some time to come, particularly as companies have really, kind of clamped down on their business travel expense reports.
Yes, actually, we saw it start to rebound probably mid last year or so, and it was kind of picking up slowly throughout the year. But as we see it continuing to rebound this year.